Hello, everybody. Jim Malone here. It is Dallas Trading Floor. It is a Monday. It is November 9th, and here we are back on Dallas Trading Floor. Very interesting day today. Of course, we're looking at many things going on here with the election and kind of the fallout from that. We just don't quite know exactly what's going to happen. It looks as if most of the major networks have declared Biden the winner, but that is still up. That is still up in the air. So, we may have some more stuff going on here. We just don't know kind of what's going to go. But interesting thing did happen today. There was an announcement that Pfizer has successfully developed a COVID-19 vaccine. And this is very interesting because immediately when this happened, many of the stay-at-home stocks, well, they didn't do as well. And Zoom has been selling off, and some of the other stocks have been selling off. So it's kind of an interesting thing. The market direction, though, is still up, as you can see right now. When this slide was taken, the market was really moved up. The 1,194. It's up about $205. When this slide was taken, the S&P is up, the Dow Jones is up, the volume's up, and we are in a confirmed uptrend. So it's maybe time to possibly look at possibly coming out of cash into some of the other stocks that are out there. And I just kind of wanted to go through some of these charts with you, just to kind of get an idea of where the market direction is and where we're going. So this is the first one, of course, and this is the Spider. Everybody knows this is the world's largest ETF, and it does cover the S&P 500. So that is what it covers. It has moved decisively above a 358.75 buy point. So this is very interesting. This is a very bullish sign. So it looks as if things are getting get into into the market. I just wanted to say, for the people that are listening on TikTok, TikTok does not allow the green screen to actually show the charts, but I am simulcasting this right now on YouTube at youtube.com/Dallas Trading Floor. If you'd like to see all of the charts and other items that I'm going to be putting up there, just jump on over to youtube.com/Dallas Trading Floor. So that's where all those things are. But I'm still going to answer questions off the chat, of course, on TikTok. But unfortunately, I can't. I can only do the chat, and I cannot broadcast the chart. So you have to go over to the youtube.com/Dallas Trading Floor. I just want to show you this chart again on the S&P, and basically it has pulled above the very key level 358.75, and currently, when this chart was taken, we were at 359.65, up $9.49, which is tremendous because that represents about 2.71%. So very, very bullish sign. And I think that has to do with a number of things. Of course, the Pfizer announcement was very significant, as well as just kind of some of the resolve on the election. So hopefully that all gets resolved soon. Also wanted to show you the chart on the QQQ. Now, the Qs have been pulling off today. Very interesting. A lot of the stocks like Zoom that were on the Qs have been under pressure because of this announcement by Pfizer. Pfizer announcing that they do have a vaccine that they're going to be rolling out, and it looks like it's going to happen before the end of the year. So that's very good news, and hopefully this will help with the reopening of the economy. Also, Tesla was up today, but it has pulled back a little bit. So I'm going to be talking about that in just a minute here. before, in just a minute, we're going to be talking about Tesla. I wanted to show you a breakout stock. This actually broke out last week. I went into it with a small portfolio, and by the way, you can see how I trade everything by getting access to the small portfolio. But this is Palantir Technologies. Symbol on this one, PLTR, and it did break out very heavily. There's been a significant buying of it in the last few days. Now, there is one cautionary flag here, and that is it's going to be in earnings in 3 days. Typically, I don't like to buy them into earnings, but this was a breakout from a what they call an IPO base, and I made an exception in this case and bought as it broke out of this IPO base. It basically broke out from about this, this about $12 level on up, and now I think it's trading. When this was taken at 15, 13, I think it's pulled back a little bit since then. But that's one you might want to look at, Palantir Technologies, and I do think we're going to see it move higher. Just wanted to show you the news about Pfizer. Very interesting. Basically, Pfizer and the partner BioNTech, basically they expect that the Food and Drug Administration will issue an emergency use authorization for the coronavirus vaccine. The companies say that they can make up to 20 million doses by 2020 and up to 1.3 billion by 2021. So that is extremely good news, and I hope that I hope everything goes right with this. This is really great. Hopefully, to get us out of this lockdown, this lockdown kind of thing. And by the way, on this lockdown kind of thing, a lot of the stay-at-home stocks like Peloton, PTON is the symbol on that one, have taken a hit, because if we reopen, then there might be some strength there. Also, there's been some interesting action in the airline stocks. I still think it's too early to buy airline stocks because, we just want to see how this vaccine works. But that's very good news for certain parts of the economy, being the travel and leisure industry, because they have been hurting in this lockdown economy. Just wanted to show you a chart on Pfizer here. It has gapped up. It is currently trading about $39.77, up $3.38, which is tremendous considering it's about a $30 stock. So it's up 9.27% on the news, and very, very, very strong buying. So we may see Pfizer really move higher in the next. I'm currently not in the issue. I'm studying it right now for a possible buy in that. Just wanted to show you my current holdings. I'm in Cloudflare, which is symbol NET. I'm also in Grayscale Bitcoin Trust. That's GBTC, and they hold about 4% of the world's Bitcoin. I'm also in Form Factor, symbol FORM. That's up today. Also in ResMed, that is done quite well as well. RMD is the symbol for that. Imphy, down a bit on Imphy. Kind of disappointing there. But I do expect, because of their merger announcement, that they will be hopefully strengthening up there a little bit. We'll see. Symbol on that one, IPHI. As I said before, I'm in Palantir, PLTR, and that is a software company in the privacy space, and it's done quite well from its IPO. It's up about 10% today at about 15.31. I'm also in Facebook. It is down significantly, so I didn't call that one quite as well as I'd like to. I'm also in AMD, which is coming off of a cup and handle formation, which is looking good, and then in Snap, and then I also bought a position in Tesla today, which is up slightly, and I think that hopefully when it moves through this, when it moves through this, I think hopefully we'll see a return to kind of its normal ascent. So let me just kind of get some questions here, and start with TikTok first. So let me just kind of pull the TikTok questions up. Thanks for waiting here. Hold on. I only got a number of. Okay, so let's see. Buy now. Come on, dude. You missed it. Well, okay. Well, I could see that. Okay. How about Tesla? Well, let's talk about Tesla a little bit. Let me pull up the charts here. Yeah. All right, so let's get in the Market Smith. There we go. And let's look at Tesla. TSLA is the symbol for Tesla, of course. And let's take a look at that, how it's trading currently. It pulled up, but it is pulled back. It's pulled back significantly as the day has moved on. It's pulling right back to the 21 to the 40-day to the 40-day average. It pulled up and then it's pulled back down. So hopefully we'll get a reversal off this. But this morning it did look good, but I guess it's pulled back down a little bit. So who knows what's happening with Tesla. Again, I did buy a little bit this morning, so I may have been stopped out. We're down about $2.45 as of right now. So you win some, you lose some. So we'll see how that does. They've been doing pretty good with their deliveries in China, but we will see how that works out. Jesper asking about Bitcoin. Let's see if we can take a look at Bitcoin. I use GBTC as a proxy for Bitcoin because they hold about 4% of the world's Bitcoin. It is an ETF, and it has pulled back significantly. It was up, and then it pulled back significantly. So let's take a look at the chart for Bitcoin right now. Pulled back 58 cents, but it's still up, a lot of volume. So it's hard to say where we're going with that, but it looks as if it looks as if it is definitely pulled back on the relative strength at 91. So this is telling me is that at least for Bitcoin right now, it's pulling right back to the 10-day line, and we'll see if it reverses off of that. But there's just kind of confusing in the market right now. I can't really give a good direction on Bitcoin. Again, I'm in GBTC, which is the Bitcoin, essentially the Bitcoin equivalent. I just kind of want to show you the layout of my holdings currently in the small portfolio. And by the way, you can take a look at how I'm trading with my watch list, and it's all free. All you have to do is go to www.dallastradingfloor and sign up, and you'll get this absolutely free. But currently, in terms of where I am in grades, I bought this a few weeks ago. I'm still up 16%, which isn't too bad. But the Bitcoin has pulled back a little bit today, so it is what it is. Sometimes it happens that way, that it does pull back. So that's kind of where we are in terms of Bitcoin. Let's see if I could take another question from YouTube. Bad day for me. I'm sorry. Sorry about that. Snap. Yeah, Snap. I'm in Snap too, and I got snapped out. I just kind of want to show you, just so you'll know that as Clinton used to say, I feel your pain. Believe me, I do. I'm doing good on everything that's in my small portfolio, except for the Snap. It's down 6%. Ouch. Ouch, ouch, ouch. I may have to be out of it, but right now Snap is snapping back. So I feel for you, man. I feel for you. I really do. You win some and you lose some. That's just kind of how it is sometimes. What's a good stop loss for Palantir, considering it's up 30%? Here's what I'm doing with Palantir. That's symbol PLTR. I like going in at about a 20% gain. Okay, now what do I mean by that? Let's go back to the chart. Let's go back to Palantir and take a look. PLTR. Let's see if there's any kind of support that we can. These are tough because this is basically going off of an IPO base. What I'm doing is I'm moving my stop loss up to kind of where there was a, where there was a profit zone. So I'm looking, I'm putting my stop loss for Palantir at about 14. That's where my stop loss is going for PLTR. And the reason is because that is the profit taking zone. Anything over 20%, of course, you're supposed to take profit. But there's another rule: if you're going really, really good like this, like we are now, you don't want to stop it short. So that's where I'm putting my stop loss, is at about 14 on that. So I'm just going to put that down here on the chat. But the stop loss for PLTR for me is going to equal $14. So I'm going to put that out there on the chat. By the way, if you're looking on TikTok, I'm broadcasting this live on YouTube at youtube.com/DallasTradingFloor, and on that there we have a chat, and so that you can come back with information. Of course, there's also a chat on TikTok as well. So, but just not the charts, unfortunately, for TikTok. Peloton. Let's take a look at Peloton, because that's one of the stay-at-home stocks that's kind of gotten hit today with this announcement by Pfizer. So PTON is the symbol on Peloton, and it's done really great. But it is just it's help. I've fallen and I can't get up. Okay, I don't like saying this because hey, this is why stop losses are so important for everybody. Okay, we have what they call this is a sell signal. Sadly, this thing kind of fell through the 40-day average here, and it looks like it's falling down, and there's a lot of volume. So you know what, I don't know. Maybe you could stick around for some more punishment, but Peloton is off $22 today, which is significant. And this looks like a massive sell signal. This is a gap down. This is why it's so important to always have stop losses in there and adjust them frequently, because sometimes this happens. Really, the proper place for the stop loss on this one probably would have been at the 21 exponential, which is about 118.50. That would have been on there, and that probably would have saved you some money, even though it did open lower. Today it opened, it gapped down. It opened below the 21-day exponential, right at the 40. This is one of the reasons why when you have a highly moving stock like this, and this goes for Cloudflare and Peloton as well, you want to set your stop losses basically at the 40-day line. That typically is a very key point for a lot of programmatic traders, because at that they either buy or they sell. So if you do have a situation where you're going to have a big gap down on a stock like with Peloton, that probably will save you some money. So it's a tough row to hoe when it comes to that. And I definitely feel for you on that on Peloton. I really do. Why do most stock markets gains take place in the pre-market trading? I don't think we even trade pre-market candidates. That's a good question, Christian. The reason that they do is because most, and that's a very good question. The reason is because many of the large funds they don't trade actually on the floor, actually on any of the floors like the Nasdaq. They trade through something called Citadel. And Citadel is based in Chicago, and the way it works is it basically trades, it matches orders overnight in the after hours. And so you can see what's happening with Citadel. You can see what's happening with Citadel if you have like a TD Ameritrade account or something like that. It will show you kind of how it's trading in the after hours. But yeah, the after hours have grown in popularity. It's mainly because you have these large funds and they want to either buy or unload large positions before the market opens. And this is how they do it. This is how they do it. And they do it through this thing called Citadel, which is in Chicago. So it's kind of an interesting thing. All right, so let's see about a next question from TikTok. Thanks for holding on here so I can get to all the questions. ACB. Let me see if I can give you something from ACB quickly on that one. That's Aurora Cannabis. It's pulled up. Actually, the cannabis stocks may benefit from a Biden presidency. That would probably mean that there would be, there would in a Biden presidency, there's probably going to be legalization, probably in all 50 states. So that might benefit there. But here's the problem with Aurora: it just doesn't have a very good chart, as you can see. It moves. It's still moving in a downward. It's still moving downward, but it did gap up today, and it's crossed the 200-day line. I typically don't like to buy any stocks, and I mean any stocks, where it is trading below the 200-day moving average, and that's definitely the case with ACB or Aurora Cannabis. It did see some activity here, but and there is some earnings. But the problem in the cannabis space that I see is a tremendous oversupply. There's just too much people. There's just too many people growing this stuff to be to be that profitable. So I do see that as a massive problem. Okay, it's a good idea to sell a call on Tesla, just keep the shares. Right now I think it is a good time. It is a good time to sell a call on Tesla. I really do. Now, here's the thing: to sell a call, you need to have at least 100 shares, okay? Because that's what the covered call will give you. So selling a call is a very good way. I do this a lot to generate extra income. I think definitely selling a call would be good. I think you want to sell a call that's going to expire probably in the early December timeframe, and you might want to consider selling a call at about the 465 to 470 range, and that would give you probably a pretty good yield on that. I don't know currently what that is. Let me see if I can find that real quick. Well, I don't know if I can for you. I'm a little bit. Let's see if I can find you a yield if you have, if you were selling a call on Tesla, which I do think is a very good idea, by the way. And let me look at some of the December calls to see how much they're going for. And TSLA, of course, is the symbol. And okay, let's look at about a mid-December. Okay, so I'm going to look about let's look at here. Okay, let's look at some of those December calls to be sold. See how much they're potentially worth. And I'm looking about the 465 is worth about $12. Let me show you that on the screen right now so you can see that. As you can see, this is the December 11th expiration, and currently that is worth for the 460. Well, let's see if we can get the 465 up here really quickly for the Tesla call. For the 465 Tesla call, you're looking at about $14.70 on that. And if you do sell that, of course, that's worth $1,470. That's what will be put into your account for selling the call. Now, if on December 18th, Tesla exceeds 465, you will be called out, and you will have to sell at that 465 price. But very good way to make extra income if you do have 100 shares is to sell a covered call, and highly recommend it, and it can be very, very profitable for you. Okay, so could the Nasdaq suffer if retail or service sector are removed? I mean, the money coming in. Okay, yeah, I agree with you. Well, you know what? The Nasdaq doesn't have a lot of retail. That's mostly in the S&P. But there is some retail in it. Where the Nasdaq is very heavy is in tech, and of course, part of the reason that it is underperforming today, of course, is the stay-at-home stocks like Peloton and Zoom, and some of those other ones. They have sold off heavily today because of this Pfizer news with the new vaccine that's coming out that may hasten the reopening of the economy. That would be a very good thing for a lot of the retail and the travel and leisure stocks, but not quite as good for the Zooms and the Pelotons and the stay-at-home type stocks that are out there. So just kind of FYI. What do you think about Beyond Meat, and why is it falling? Great question on Beyond Meat, and I think this shows you, this is something that Warren Buffett talks about a lot. It's called having a moat on your business. The reason that Beyond Meat is falling so much today, and it probably will fall further, is McDonald's has announced that they have their own fake meat. It's called Mac. I think it's called, I don't know, Mac Plant or something like that. I'm not sure what it's called, but they just announced it, and basically they're going to make it themselves, and essentially Beyond Meat is going to be out in the cold. So this is the problem when you have a technology that anybody can relatively easily move into, and I think that's going to be the case with McDonald's and Beyond Meat. So I don't think Beyond Meat may be beyond its prime, and don't know about it, but I think that you're going to see Beyond Meat move down a lot. So let's take a look at the Beyond Meat chart really quickly. It's difficult to trade stocks just totally on the news because it's the fundamentals and the momentum that really carry the day. But in this case, with this news, and of course the relative strength is still very good, but it is pointing down, so that's not good. We had a gap down today with Beyond Meat and a sell-off. So it looks like Beyond Meat may be in a situation where we have a head and shoulders. We'll see if it pulls back above the 40-day line. Then Beyond Meat may be an excellent candidate to short. I will be talking about shorting probably in the future, but I think Beyond Meat there may be a lot of air that goes out of Beyond Meat. So this may be an excellent short, potentially making money. With this, I think with the McDonald's announcement, I don't know if it's true. I don't know what's going on with it, but if McDonald's has their own meat that's plant-based, I think it's called Mac Plant or something like that, then I think Beyond Meat is going to be very, very challenged. Very, very challenged. You bought it at 194 and now it's 151. Sell immediately and be careful because I don't think this thing is coming back. Not looking at this chart. This is potentially a short. I'm sorry to tell you that, but I don't think it's going to do as well as it has been in the past. Jim, what do you think of Roku? Well, Roku, I still like Roku. I'm not in Roku currently. But I do like it. Now, the question is, how far are you down? The rule of thumb is if you're down more than 7%, it's a good idea to sell, and then you can always come back in the stock. But the first and most important thing is to limit the bleeding. And we definitely have a pullback to the 21-day exponential. I'm showing the chart right now on the screen. If you want to see the chart, you can just jump over to www.Dallas Trading Floor, or you can go to the YouTube, youtube.com/Dallas Trading Floor. And this is number 170, in case it doesn't come right up on your screen. Episode 170. I'm showing the Roku chart. The Roku chart, it looks as if, they had excellent earnings, but there was a pullback anyways. This is classic. This is a classic example of why, when you're coming into earnings, you want to be very careful, and usually you want to sell the day of earnings and then wait to see how it performs. And typically, many times it'll pull back and then buy it on the rebound because even if it's really good earnings report, typically many stocks will pull back because it's the classic buy on rumor, sell on news. So that's kind of something that you've got to look at when you're pulling through one of these announcements. But Roku announced they did extremely well. Their earnings per share was up 141% in the quarter. Just really, really strong. And their sales also were up 73% quarter over quarter. So that's also, year over quarter. So that's also excellent. You have a lot of banks in it, but even with all of that, it still wasn't enough, and Roku pulled back. So can you get back into Roku? Well, let's see what happens. Let's see how it comes through this earnings. There might be a buy point coming up, but currently there isn't. So that's one of the things that I always like to do is sell into earnings and then wait and find out if if it's time to get back in or not, because that sometimes can be can be disheartening, is doing these round trips where you just go up, you just give it all back. So I hate that. So that's one of the reasons why selling into earnings sometimes can be a good thing to do. Let's look at FSR, and this is a question from Harris. Thank you very much. FSR is the symbol, and that is Fisker. And Fisker is a really interesting company, by the way. This is an electric vehicle company, but unlike a lot of the other companies, I think this one may have legs. And the reason I think it may have legs is they have an agreement with a company called Magma. And Magma is a company that manufactures all kinds of things. They are a subcontractor, kind of like Flextronics, if you're familiar with them, or some of the other companies that make for other companies. But I think that's one of the great things about Fisker. It's a little bit too early to buy it. It is up strongly, though, by the way. Typically on a IPO like this, you want to wait at least 3 months. We have waited a while, and it may soon be time. But right now, we don't want to buy this below about 2160, and the reason we don't is because that was the high. We want to wait for this thing to exceed 2160, and when that happens, then I think we may have a really good something really good on our hands. I like this idea of this company. It does have a little bit of a challenge checklist here. It only has 4 out of 9, which I like to see at least 6 out of 9. So I wouldn't buy this now, but this is a watch list. Ownership, it is moving up in terms of the number of funds that are in it, which is very good. And of course, it doesn't have any options on it yet. It's too early. But at 14.29, I think you want to wait on this one. Let the IPO base cure a little bit, and then when it moves beyond 2160, that's when I think you want to take a look at it, because this one could be very, very good. So very good. That's a good stock, but it's a watch list now. Not time to buy it yet, and just time to wait. DKNG. Let's look at it. DKNG real quick. DKNG. And that is DraftKings. This is also one of I like this stock a lot because I do think online sports gambling is going to be a very big business. Of course, a lot of other people do too. There's nothing unique in that. It's pulled back a little bit. It's still below the 40-day, so it's a little bit it's a little bit challenged, but it still has a 98 relative strength. Let's look at the Bryan criteria on this to see if the checklist is good enough. It definitely is. 6 out of 9. That's looking pretty good in terms of the buying criteria. I typically will only buy something that has an O'Neill checklist rating of 6 out of 9 or better. And of course, there's 9 criterias that William O'Neill buys on. Let's look at the fund ownership. That's very important too. We have increasing fund ownership, and we do have some very key funds in this. For instance, Fidelity Contra Fund, this typically is sort of like the good housekeeping seal of approval. So I kind of like DraftKings, but the question is, where can I buy DraftKings? I think you're going to have to wait until you get to at least the buy point again, which is 44.79. Currently, it's at 41.50. I know it sounds very strange. Why wouldn't you buy something cheap? And why would you buy it at a higher price? Well, the advantages of buying it at a buy point is that it tends to be settle at that point. It tends to have a kind of a floor on the price. Not always, but that's how it typically works. So this is still a watch list on DraftKings right now, at least until we kind of sort out what's going to happen with this stay-at-home thing. So we'll see what happens there. Okay, so talk about right. Oh, why did you talk? Okay. Why did McDonald's fall so much? Good question. Well, they have this thing called Mac Plant. I think that people are thinking, well, now that real restaurants are open and not just drive-through, that Mickey D's may suffer a little bit from that. They were doing excellent in terms of in terms of in terms of this COVID thing, but they definitely took a hit too. Look at that. They're down they're down $3.38 as of right now, almost 2%, basically 1.5%, which is significant. And they pulled right below the 21 day exponential. They're still they're below the 40 days. So who knows? I mean, they only have relative strength. I say only of 69. I typically like to buy 80 or better on that relative strength, but who knows why they pulled back so much? I think it has something to do with the reopening economy. McDonald's was getting a tremendous amount of business. As a matter of fact, I got my breakfast there this morning. It got a tremendous amount of business because everything else is shut down in the restaurant space. So, that might have been a reaction for that from that. I don't think there's any problem with McDonald's. I just think that they're going to have more competition when it comes to when it comes to things. Let's look at Snap. And, of course, I have Snap in the small portfolio. I didn't fortunately, I bought it a little bit of time ago, so I haven't suffered as much as some people have. It just kind of pulled back hard, right to about 41.09 or about $4.29. I don't know why this one was pulled back so much, but I think it has something to do with the with the vaccine and the reopening economy. Snap should do very well in a sort of a small business environment because that's kind of who the payment services are oriented towards. Now, one thing I kind of want to say, there are two areas that tend to produce a lot of long-term leaders and have for the last few years. One of them are payment companies like PayPal, which is off today, by the way, MasterCard, Visa, of course, Snap. And the other one, of course, are the software companies. And those two have been an inordinate number of good companies have come from those two particular areas in the last about 2 years or 3 years. So that's something to watch. But, it's pulled back. Can't really tell you why it's pulled out. But, here's the thing. It is still on the 10-day exponential. So this is looking actually not bad. If this thing had pulled through the 40-day or average, I would say sell this puppy, but it is definitely not. I mean, it moved above this neckline on a cup basis, and then it gapped up, and it stuck to the 10-day exponential, the 10-day average, which is the best of the line. So I still think that Snap. I think Snap is adjusting, but I don't think it's time to 86 Snap. I don't think so. I still think it's pretty good. All right. What's your thoughts on Tesla? Let's go back to Tesla to see, and again, I bought some Tesla today. So I probably jumped the gun there a little bit. Tesla has pulled back and pulled up again, but it's settling right on the 40-day, which is this red line here. And so it's pulled right to that 41-day. So let's see if I can give you exact number. Yeah, it's pulled exactly to the 41 to the 40 days. So has it changed direction? Well, I think it did change direction on about March over the last week. I think it has changed direction. I still think it is moving. It is moving higher based on this chart, but it is pulled back to the 40-day average. So I think we will see probably a reversal, and at least I'm hoping we will, and it's moving higher. Now, will it make 500 by the end of the year? It possibly could, though it seems to be in a range. It seems to be range bound right now, and it looks as if there is also some resistance at 465.90 on Tesla. So that's kind of what it's saying right now with Tesla. So I wish I had better news for you on that, for me too. So, that's kind of how it sort of went. Nike. Let's look at Nike. Nike is maybe doing really well. Now, I've heard, and I don't know if it's definitely the case that Nike, I'm sorry, I say Nike, that's the wrong way of saying it. May look at that. It's just powering that right up. So very good. Maybe this is based on some of the stimulus payments that might be made, but it is pulled up tremendously. Look at that. Very, very nice. Very nice gain here. So let's look at the weekly chart on Nike. We'll see if there's a place you could get in on this. It looks like it's like moving right up the 40-day moving average. So let's see if I can find a entry point for Nike for you. It doesn't really look as if, though. It looks like it pulled way up and then it's pulled way back. Isn't that interesting? Let me see if that is right. Yeah, 428. So obviously it definitely has some upward momentum. It gapped up and then it pulled way back. It's got a relative strength of 88. That's good. 80 or better is considered excellent, and so that's good. And it looks as if, let's just look to see at the checklist. Well, it's 6 out of 9, so that's good. And we have we have slightly decreasing fund ownership, but nothing serious. And we have a Fidelity Contra Fund in there. So it all kind of looks pretty good with Nike, but the question is, where do you buy it? I suspect that if it bounces off of this, I think it may pull back to the 21-day moving average and fill the gap down at 126. So let's see if it pulls down a little bit more and see if it reverses. I don't really have a good buy point for you on this, unfortunately. The last true buy point off of cup with handle formation was 104.69. So I don't really, unfortunately, have a good buy point for you on Nike, but it's definitely watch listable. And of course, it's doing really well. So, and I think it's maybe this direct to consumer model that that they may have. Thoughts on FANG and their sell off? Well, FANG, there's been a whole lot of, this rally has been kind of uneven and has mostly been in the FANG stocks. So a lot of this is give back. I mean, I have some Facebook that's sold off today as well. I think let's look at Microsoft. That's sort of the bellwether one to look at. So MSFT, of course, is the symbol for Microsoft. So let's look at the weekly on Microsoft. It's pulled back today too. Yeah, it's just pulling right back to that 40-day line. So it just seems to be, it just seems to want to settle at that 40-day line. There's a big pullback today. It's off $5.33, down 2.38%. So, and the volume's up as well. So interesting. We have a 92 relative strength. Unfortunately, this relative strength is going the wrong direction. And that's too bad. So I do believe that we may pull back. We may see Microsoft pull back to 200. Let's just take a look based on this chart. I don't, you never can totally tell, but it seems like we're in a kind of a consolidating. We're sort of in a range-bound situation here, with the top being about 225 and the bottom being about 200. So it looks as if Microsoft could move down to about 200, in the next week or two. We could see it pull back. I think we more than likely is, because this is definitely, according to the way I'm looking at the chart, this is a directional change, and it looks like it may test the bottom. It may test its support. Support basically right now on this chart, there's support at 196.25. So 126.25 is support for Microsoft, and it is in a downtrend right now. So if you do have Microsoft and you do have a profit, you might want to consider selling it and waiting until it bounces. I do believe it will bounce off of the 196 level, but that's kind of the way it is for right now. For FANGs are selling off, people are taking their profits, and there you go. It sometimes happens. It sometimes happens like that. Okay, Jim, what do you think about buying Zoom? I would say no. Don't buy it, because Zoom is giving back a lot of its. It's not that Zoom is bad. It's just that it's gotten way ahead of itself, and I think that we're going to see support. It's right now at 413. I just want to show you the chart. I don't think you want to catch the falling knife on this one, because that's really what it is. It's a falling knife. And let's look at the weekly chart to kind of give you an idea of why. There's been a directional change in it. It basically peaked out at almost 600. And as you can see, the directional change is down. Now, I do think that there will be some support right about this level. So I'm looking at this chart carefully. I'm seeing that I do think that that Zoom may fall as low as about 260 before it pulls higher. So right now, I'd be very, very careful buying Zoom. I don't think you want to change. It has changed, definitely changed direction to the downside. So, you want to be a little bit careful. This is the reason why you typically buy at higher highs, because you want to make sure that you're buying in the right direction. You always want to buy something as it's going higher. I mean, I know that sounds very obvious, but one of the reasons that's one of the reasons why you always want to buy something within 15% of its absolute highs, because that will because if it's lower than that, typically it could be difficult, because it may change direction on a downward from you. So that's one of the O'Neill checklist items it is buying a stock when it's making new highs or within 15% of a new high. So that's kind of a good rule of thumb. It really is, because that's directional. And again, we're directional traders, we're canceling traders, and that's how we work it. CROX, Clorox. I think it's CROX. Is that right? CROX. I think that's Clorox. No, Crocs. I'm sorry, Crocs. Why can I forget? Who can forget those shoes that you use to gardening? It's pulled back today, but it's sticking right to that 21-day exponential. So that's looking good. There is definitely there's a very, very nice pattern here. And let's look at I'm looking at the daily as well. Let's look at the daily. Yeah, it's pulled right back to the 10-day exponential, the 10-day moving average. And by the way, I talk about these lines, and let me explain a little bit about what they are. There are four major lines of resistance as the stock moves higher. Now, the one that you want to be familiar with is the 200-day moving average. Okay, typically you want a stock, obviously, that is doing better than the 200-day moving average. If a stock falls below the 200-day moving average or is below the 200-day moving average, you really should not even buy it at all. The second line that's very, very important is the 40-day moving average, and this kind of gives you a monthly kind of average of where it's at. You definitely want to be above that line if you're buying anything, but that line, you could buy stuff below that line if it's accelerating through that. So what I'm trying to say by that, meaning by that, is that line is very important as well. Now, typically, if the 40-day line crosses above the 200-day line, that is an ascending chart, and so that means that the chart is people are buying it and the stock is going higher. If on the other hand, the 40-day has crossed below the 200-day, that means that's a descending chart, and you want to get out of that stock. The next important line is the 21-day exponential moving average, and that's pretty much as it sounds. It's about a 3-week average. That's a very important line for programmatic traders. They typically will, if it pulls back, if a hot stock pulls back to that, they will then buy it or they will sell it on that line. The next important one, of course, is the 10-day moving average. And the stocks that are outperforming, they're typically going to march up that 10-day line. So that's going to tell you whether or not it's worthwhile buying it or selling it. Right now, if we look at the chart for Crocs, we have pulled back to that 10-day moving average. So if by tomorrow that thing falls below the 10-day, if it continues the direction that it's going, and it looks as if it is because of the shape of the candle, then we probably don't want to buy that. But if it reverses and it moves above that line with a candle that has where the wick is below it rather than above it, then that will be a good sign for it to going higher. I wouldn't buy Crocs at this point, but I would definitely watch list it. And that's pretty much it. So let's see if there is a buy point on Crocs. The last buy point was way back, basically almost at the beginning of the year, on a first stage consolidation base at 31.88. So it's been, Crocs is still good, but not. It wouldn't. It does have very good, very good relative strength. It's 95 relative strength. So, want to kind of keep it in your, keep it watch listed. If it reverses higher, then I think you might want to consider Crocs. But right now, don't buy it as it's moving down, because it could be, it could be deadly if you do it that way. BLDP. Let's look at BLDP. BLDP. Okay, BLDP is Ballard Power Systems, and of course, Ballard is an interesting company. They make electric buses, and they have been for a long, long time, even before Tesla was around. Ballard Power Systems were around, so they have a lot of experience. I definitely like this company on those for those kind of reasons, because they do have the engineering talent and the experience. It has a relative strength of 93, which is excellent. It's right at the 40-day moving average. 1616 is the price currently. Let's look at the checklist. This is an area of concern. This is why it is not a buy and it's a watch list, but it is a watch list. 5 out of 9 on the O'Neill checklist, which is a little bit less than I like to see for something, and it really has to do with the earnings per share and some of the sales growth on that. That's the main thing. Not enough. Also, we do have some funds in there, but not nearly enough. Now, that said, I do think that this Ballard is sort of in a good place, and I think the chart looks fairly good. I mean, it's moving right up. It's one of those slow and steady wins the race type companies. It seems like it's moving right up to that 40-day average. So, would I buy it right at this level? No, I probably would not, but I would definitely watch this. The last cup buy point on this, basically, this is a second stage base, was way back in December of last year at about 650. So currently it's selling for 1660. So it's pulled way above that. But it does seem like this is a watch list. I think this, if the electric vehicle market heats up a little bit, this could do extremely well. But right now, I don't think you can. It's a watch list only. It's not a buy. It's not a buy, and it's not on the ready list. All right. Hey, thank you. Thank you for watching, Kay. I appreciate that. I'm glad there's somebody out there that actually is interested in what I'm doing. Please let us know what moving averages do you use, and also what do you think of whole moving average. I don't know what the whole moving average is, but I'll tell you that I use 4 moving averages in my trading. The first one, of course, is the 200-day average, and that's used by most investors, most chart people, and that's the 200-day moving average. And on my charts, it typically is a black line, and I don't typically like to buy anything below that. The second an important one is on the weekly chart. There's a 50-day line that we use, and that's a red line, and that's the second one. And on the daily chart, it's a 40. Then I use a special one. It's a green line. It's the 21-day exponential. This is the line I like to see for trend. I like this one for trend. And then there is another line above that called the 10-day, and that's the 10-day I like to see because that's on the really hot stocks that are moving higher. I want to see how they trade on that 10-day line. So those are the 4 lines that I use. That I use, and I really appreciate you asking that question because that's good. Because learning how to trade on those lines can be very, very profitable. Buying options on ARK. Of course, this is ARK Invest. This is Kathy Wood's ETF that's done incredibly well, actually. She's was an early large investor in Tesla and some of the other socially responsible type of investment companies. And so she's done really, really well. So let's look at this chart. Where is there a buy point on this? ETFs are a little bit different in terms of individual stocks in order to buy them, because on an ETF, with an individual stock, you always want to buy it as it's accelerating above a buy point or a moving average. On an ETF, because it's a basket, this is you buy these differently. You can buy these on a pullback. So actually, right now is not a bad time to buy it. Now, I know this is a strange kind of thing to get your head around, but if you have an ETF that's made up of many stocks, so buying when it pulls back and it's lower, as long as the trend is good, that's a very good strategy. It's not a good strategy if it's an individual stock. You don't want to buy it. You want to buy it as making a higher high on an individual stock. But because ARK is an ETF, buying it at this level, I think, might not be a bad idea. It looks as if it's still within trend, it seems like it's range bound, and it looks like it's moving from about the 89.50 level on up to about 106.15. That seems to be the range that it's bound in. It may move a little bit higher, but there has been a lot of selling on ARK ETF today. It's definitely over the line, but I definitely think that I definitely think that it's good at this point. You could be very confident, I think, with ARK Invest. What's going on with that? I've been trading low volume. Yeah. Okay. Here we go. Okay, it has a bullish trend. Absolutely it does. PFE, of course, this is the company that, along with a German company, has announced a vaccine for COVID-19. And it's a tremendous thing. It's pulled way above, as you can see. There is a lot of buying going on. This is essentially a gap up above its buy point. Means the buy point here is 39.45. It's above that right now. It's just outside of the profit taking zone. You could definitely buy it at this level. You could definitely buy it. So it's just a tad extended, but PFE. The buy point on it is equal to 39.45. So I'm going to put that out on the chat so everyone can see that. What does it mean? What does the buy point mean? Well, here's what the buy point means. A buy point is essentially where the stocks kind of rest as they're moving higher or they're moving lower. And if it exceeds this buy point, it's very likely, if it does pull back, to pull back to approximately that level and not any lower. It creates some support there. So the optimal place typically to buy a stock is at the buy point plus 5%. So in a range from the buy point up about 5%. Now, if you were to do that strictly, this would be what they call extended, because the buy point would extend basically from 39.45 up to 41.35. So that would be the total buy point. But right now it's selling for 39.20. But it's still essentially, it's extended, but not that much. So it is potentially buyable at this level. The thing to do is to see how it trades tomorrow. I think it will pull back a little bit, probably into the buy zone. So tremendous stock. And by the way, it's very well capitalized. This is one of the biggest pharmas out there. So it's a very strong stock. And I think you could, even at these levels, I think you could be pretty assured that the trend is probably going to move higher. Let's look at the weekly just to make sure that I am not giving you a line. Yeah, the trend has been up until now. It's been a little bit. It's been the 200-day has been moving a little bit lower, and but the 40-day moving average has just crossed above the 200-day. That's very good, and so the trend has definitely moved in. It has moved higher. And the thing about this, these are very largely traded stocks, so you're not going to get this thing going to the moon probably, but it's going to probably be very stable. And I think I think it's a good investment. And it definitely is one of those kind of things that I think that you could be very proud in buying. Let's see. Will you be sending a trade alert on Pfizer? I might be. I didn't obviously today because I wasn't privy to the news. But I will. I probably, that's a good idea to put out some info on Pfizer going forward, because it may pull back a little bit. There is I think probably the thing to do is to put out the trade alert if it is in the buy zone. And by the way, if you want to get these trade alerts, super duper easy to do. All you have to do is go to Dallas Trading Floor, the website, and then sign up online. It's www.dallastradingfloor. And of course, if you're interested in the way the website looks, it looks like this. It's not the most beautiful website in the world, I will admit that, but it is easy enough to get on the trade alerts. And if I get it right yet, I'll give one more there. And I'll show you that. Yeah, there we go. Okay, so this is what the website looks like, everybody. Oops. There we go. All right, there we go. And to get the trade alerts, all you have to do is go to this page. It says subscribe, free trade alerts, first and last name. Hit that subscribe button. Of course, it's all free at Dallas Trading Floor. Well, I have talked almost for an hour. As a matter of fact, it's 59 minutes. So just wanted to indicate I have something new. It's kind of exciting, at least for me it is, and that is we now have some we're on Google Podcasts, and we will be hopefully on iTunes here this next week. But I have a podcast that's on Google that's on Google right now. It's also on Spotify as well. And if you are interested in possibly, so if you don't, you want to listen on the go or that kind of thing, and you subscribing to it, it's really easy to do. You just go over here, and I'll give you the address here. Put it up on the screen. Basically, it's just this kind. It's kind of a complicated number, but it's bit.ly and then 3 LEEFYF. Now that's kind of complicated, but if that doesn't work, just the easy way to do it is to go over to the website Dallas Trading Floor, hit the podcasts. And you can see right there, I have all of the podcast information right there. So there we go. These are all the podcasts that are available currently, and if you are on Spotify, it's on Spotify as well. So these gives you the podcasts that are available right now if you want to listen on the go. So again, thank you very, very much, and I will be back tomorrow at 2:30 Central. If you need to, if you have any questions, you need to email. Just you can do that through the website www.dallastradingfloor. And I hope to see everybody back tomorrow at 2:30.